Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, October the 3rd. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I don't give any recommendations on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could very well be counterintuitive to what you are already doing. And please remember the past performance of any trading system or methodology is not necessarily indicative of future results. All right, having all that out of the way, let's get it on. One thing we've got going on across the pond is out of Great Britain. They had construction spending or construction PMI came in at 48.1, expected to be 51.2. Now, one thing that we've been talking about, all these PMI numbers, is what does it really say? Anything above 50 on PMI, CPI, that is expansion in the economy. Anything below 50 is contraction. So this number going back below 50, being 41.8, is showing contraction in the construction aspect of Great Britain. So that's one of the first numbers we've seen in quite some time that actually is showing contraction. So that is pretty notable to keep an eye on. And then we also got PPI month over month for Europe came in at 3%, was expected to be 0.1%. 0.3% versus expected 0.1. Earlier today, we had Fed Governor Powell speaking, not a whole lot out of that. And then all day long today, we have total vehicle sales. So that's going to give us some real insight as to how the overall auto sector is doing. I would start to expect to see those numbers start to rise because of the hurricanes and all of these cars getting totaled out. People are going to have to go out and buy new cars. So that could very well help that number in the long run. All right, on to the overall markets. We've got crude oil right now slightly in negative territory, but above that $50 a barrel psychological level. I talked about this many times. I think it's going to kind of have a tendency to bounce around between this point of control and the value area high and kind of fill that in a little bit more. As of right now, it looks like it wants to head down there, but we have a lot of supporting factors. We have the Fibonacci level right here, the 38 Fib level. We have the point of control. We have the 200-day moving average and the 50-day moving average migrating towards that. So all a culmination of those factors could very well indicate that crude oil is going to go down there and test that $50 a barrel and break below it, at least for a short term before the bulls maybe come out and start to defend that to the upside. On to gold futures. Gold futures are negative on the day, but higher than where we opened. And the only thing I have to say about this is it's really kind of like just consolidation, people taking profits, things of that nature. Now that we're below this fib level and the $1,300 area, overall economy here in the United States doing very well. Dollar is strong. I don't see a whole lot of upside for gold futures. Then on to the bonds. They're getting a little bit of a bounce, but as I said before, I think the bonds are going to stay here very close to this area. Fed governors really aren't going to start raising interest rates right now, despite the fact that we did see some pretty robust numbers here in the United States. We have the other factors of across the pond. The ECB and the Fed governors here in the United States do talk, and when they start seeing contraction there, they don't like it really when we start ratcheting up our interest rates here. It really affects them too. So there is a much more of a global brain trust when it comes to these interest rates. So I don't think that they're going to be really antsy on moving interest rates higher anytime soon, at least for 2017, let's say. We've got Dow Jones Industrial Average very close to the all-time highs, which were created today, believe it or not, broken record. We have kind of extended up here, but we're starting to see this volume thin out up at these lofty levels. which could indicate a top. I saw some other charts that could be very well an indication of us getting ready to roll over and have a bit of a correction after this rally for the last couple of months. So just keep that in mind. I'm trying to keep my deltas short for that particular reason. NASDAQ up on the day, also up by 16 points. You know, it is the real lagger here with the technology really lagging behind most of the blue chips and things of that nature. We have the E-mini S&Ps on the highs of the day, but one thing, creating historical highs if we look at it from the standpoint of the overnight sessions. Now, they don't really count that number as well, and the day session will want to print that sometime, hopefully today, because that would, you know, keep in mind that we were right there at the in the day session that was printed. So as you can see right now, we are printing that high as well. We need to get about a quarter tick to really make that high intraday, or to create a real high intraday. So right now trading there at that level. If we get a quarter tick higher, we could see that inside of today, but it is offered there pretty strong. So some charters might actually say that the high was printed in the day session as well. So now that we've matched that 25, 29, 50. But a very key number to keep in mind for the day traders, if you will. All right, on to a couple of trades that I've done. I added Applied Materials, ticker symbol AMAT. I went and add some short deltas because I added a little bit more long deltas on the next slide here, or on the next chart I'll talk about. But with AMAT, you can see they have had a big, massive rally off of some of the news that we've gotten here in the United States that kind of outpaced them to the upside. I think they're due for a correction, just moved too far too fast, that people will want to take profits on that trade. So as you can see, yesterday kind of created a top there, today confirmation to the downside, and so I decided to go in there and add some short deltas with the high implied volatility. They do have earnings coming up in this next cycle, so I just did it in this shorter duration expiry that the October expires in 17 days. So I went in there and sold the October 53 calls and collected 67 cents. High implied volatility. Hopefully I get the directionality. I would think that it would want to at least come back down and test this area. So if I can get that directionality, despite the fact that we have high implied volatility, and as the market comes off, we could see implied volatility go up. I think my directional assumption, if correct, will allow me to get out of that rather quickly. Plus, we're getting into that theta zone where theta really starts decaying quickly. I talk a lot about that in the webinars, so check those out. On to Walmart. Walmart, I've gotten the directionality right, but as you can see here with the implied volatility continues to increase. I got a little bit of a down on the implied volatility, but now even with this rally, implied volatility continues to creep up. And I already have on the October 76 calls, or sorry, 76 calls in there. And, you know, with the implied volatility going up, even though I'm directionally right, it is not allowing it to decay as quickly as I'd like. And I decided to go in there and get a little bit more aggressive with that and went in and sold the October 77 puts. And you could probably sell those 77 puts a little bit better than where I did because I was on the uptrend in a sense, but I sold mine for 74 cents. So those are a couple of trades that I've added on, pretty much neutralized my deltas with the Applied Materials short calls and the Walmart adding some more long deltas by selling those puts. Because remember, when we're selling calls, we're selling deltas going short, and when we're selling puts, we're actually adding deltas to the upside. So, all right, so those pretty much came in as a wash. That's about all I got for you guys today. Friday's webinar is going to be on the broken wing butterfly. So that's going to be a really good one. I'm going to show you how to set that trade up so that your directional assumption doesn't necessarily have to be right. You can be slightly wrong with this directional assumption and still make money. So it's a nice trade, especially in full-on bull markets. This one will be a good one for you guys to learn and take advantage of in your portfolio, because we're going to eliminate all upside risk with this strategy. All right, So go to protraderstrategies.com, sign up for that. If you can't take that, take it easy.